slope of the RL30 over the last 10 years. And that gives you a long-term historical normal for plus or minus one standard deviation, or the normal. And this is when COVID hit. Now, I want you to notice the characteristics of volatility in this area compared to the post-COVID. Look how many times this thing has been oscillating above and beyond the long-term normal and the size of those moves. This is swing trading heaven. So now when you come down to this chart, chart 7, this takes that same piece but only takes the last 200 days and compares it against the 10-year stats. So it's just a zoom in on this portion of the chart. So these turning points, when it gets outside of 1 sigma, those are rock solid signals for shifting the bias. I mean, these two charts are absolutely crucial for understanding long-term and short-term volatility statistics and conditions. That is market condition. It doesn't register easily as, or simply as, is it bullish or bearish? Is it volatile? No, it's a combination. These are markets that are in flow. This one gives you a zoom in on the z-scores of 3 regression line slopes. The RL10, you see how oscillating that thing is. When it gets to those oversold conditions and make turning points, this is that last 2 days of moves that gave you a 15% move in Tesla. This is the RL30 that gives you those owl-like conditions, owl-like signals, right? And so this is already outside of Z1, so we're looking to see this has to turn before you would really say this is owl. And then the longer term is this RL90, and this is still a favorable motion. So if the 30 can hold here, if we can get some price action on the RL10, that'll cause the 30 to turn, and that'll still give us like a COTA 2, and you would see that as price with respect to the river. You would still see that as a COTA 2 confirmed by a return to about 410. It's got to get above 410 for this to be significant. And then if it gets above 430, that's the next level of significance. So you can see some longer term shape in here. I'm going to go to the last page of the report. Just some folks asked me for some clarity on this one. So what I am monkeying around with on this one, this is a computation of, among other things, the frog quality number. But I don't just strictly go by that. What I'm really interested in are things that have the best trading value ratio, I call this, the TV ratio. So I compute the average range percentage, right? So that's the average range percentage of the last 30 days. So Tesla has been extraordinarily volatile, 7%, but it also has, with a standard deviation of 3 and a frog quality number of 2.8, that's a pretty reliable frog quality number, meaning it is consistently getting 7%, meaning there's lots of 7% days in there. up or down, it doesn't matter. Whereas you could get a large average if you had some huge days and some small days and a large day and some small days. That would drive your standard deviation high, which would drive your frog quality number low. So as frog quality number goes up, you are getting a more consistent number tightly clustered around the average. So what I decided to do was to create a trading value ratio, where what I'm doing is I'm taking the range percentage and multiplying it by the frog quality number times 100. And so if I take 2.8 times 7.8, I'm getting a number up around 20, which is the best value. And then I rank it by this number. So these top 10 symbols, you're going to notice that they have two features in common. They have large range percentages relative to all of these other ones. And at the same time, they have relatively strong frog quality numbers. When you combine those top 10 things are consistently large daily range percentages. So this is normalized for price. It is normalized for volatility as measured by average daily range percentage. So these become things that are really good to trade every day. These are like frog champions. Notice what we have: Tesla, Clean Energy, Alcoa, Disney, oil exploration, Apple, Boeing, Brazil, Caterpillar, metals and mining. Well, when the sectors like metals and mining in Brazil this is why I love Brazil. It's a sector and it's got a great trading value. So everything in pink is like a Dow 30 company, and everything in blue is a liquid ETF. So these are all liquid enough to trade, and these top 10 give you some interesting candidates as you start building out your portfolio composition of what herd do you want to be tracking. You'll see that pretty good. Now, you've got some things down in here like Merck and Walmart that do not have large intraday ranges, but they have high frog quality numbers. So they're okay. They're not as great intraday trading as those things are. Whereas these other things down here that have low frog quality numbers and low rate, you have to get really tight stops intraday. They're not making these large runaway moves. So these tend to be a little more focused and stock target for the most part. There's a few very liquid ETFs in there, but you get more of your bigger, fatter indexes down here. So you just have to trade. If you want to trade the bigger, fatter indexes, you just have to accept the fact that they're not going to be as volatile on a percentage basis. But in terms of a place of trying to find things that are currently running away from the other ones with consistently large volatility, that's a place that you can look. Okay? That's on the last page of the report. All right, that's everything we got for today. Get this published and posted, and we'll be ready for tomorrow.